Someone in the chat wanted me to cover Pinterest. That's why I love TikTok and the chat, because I would really not think to look at Pinterest. But once I dug in, it seems like this is a banger investment. I'll give my price predictions at the end. Now, if you bought Pinterest 5 years ago, you would have gone on this crazy roller coaster ride and you'd be down 26.5%. At its peak, it was at $85 during the pandemic. And in the past year, it's sort of traded sideways and it's down 5.8%. This is the type of stock a lot of investors hate to own because it seems range bound. But remember, we're not buying a squiggly line on a chart, we're buying a fundamental business. And while the chart looks pretty nasty, the business has clipped along over the years. Let me get my case why it's undervalued. Pinterest is discovery plus planning plus shopping, not just aesthetic pinning. In 2025, it boasted an amazing 578 million monthly users globally. Users arrive with intent, ideas, projects, purposes. Advertisers love this. A sick gross margin of 80%, meaning the incremental revenue mostly drops to the bottom line. And it's a cash gusher. It generated $940 million in free cash flow in 2024. And this huge upside lies in international monetization and smarter ad tools. AI will lead to smarter ad tools the same as it's going to for Meta and Google. Let's talk moat. Intent-driven platform. Users come with purpose versus passive scrolling. Evergreen visual catalog. Pins outlive trends. Content retains value. AI and tech stack. Visual search. Personalized recommendations. New ad formats. The forward average revenue per user is very low right now, so there's major upside potential. And this is a classic network effect, lean, capital efficient model with low capex needs and high reserves, little debt. Risks are copycats and encroachment like Instagram, TikTok, Google, or X. They have had a hard time monetizing abroad, so to assume that's going to change might be a leap. I'm not sure what TikTok did to my face right there, but it's kind of cool, so I'm going to leave it. It is subject to the ad cyclicality, and it could have user fatigue with over-commercialization. So here are the catalysts I'm looking for in the next 12 months. The international average revenue per user needs to climb. I want to see what their next-gen ad products look like, video pins, AI-driven ad creation, etc. Commerce enablement. Will they have checkout, affiliate links, merchant fees? My one-year forecast of revenue growth around 15% year over year. Net margins improving, aiming for 5 to 10% net margins by the year end. Potential first $1 billion Q3 outside of a Q4. And this would cause the market to begin re-rating multiples upward. Watch the key performance indicators, ARPU by region, new ad rollouts, and guided surprises. My discounted cash flow calculations, 2025 starting revenue of $4.25 billion, growth near term around 15% annually for 2 to 3 years, growth tapers and declines to 6% by year 10, free cash flow from 23 to 25%, up to 30% by year 10, terminal growth of 2%, discount rate 10%. I get a base case of $50, I get a bull case of $60, and even my bear case is $30. This is not financial advice.